Inflation continues to be much higher than expected, and so our central banks are on the fast track to raise rates faster than we've seen in 2 decades. There's been more and more talks lately about how the next rate hike in July might be 75 basis points. Remember, a normal rate hike is 25 basis points, 50 is considered big, and 75 basis points is extremely rare. But when the Bank of Canada was asked about this specifically, they did not say it's not going to happen, which is a telltale sign that bigger rate hikes might be coming soon. So in this video, let's look at what might happen to our Toronto real estate market if interest rates go up even faster. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. There are a few ways of looking at it to see how further rate hikes might affect the housing market. On the existing home owner side, those who got in at record low rates will feel the most pain on renewal when overnight rates reach 3%, which means variable rates will be around 4.5%. If someone bought a $1 million property, they would see a 38% increase or over $1,100 more in monthly mortgage payments, which would be a huge shock all at one time. According to a new debt survey by Manulife, which was done in mid-April, just after the second rate hike, 18% of Canadian homeowners already said they couldn't afford their homes. And then 1 in 4 homeowners said that they would have to sell their home if interest rates go up even higher, which they already have since mid-April and will continue to rise. So this is definitely worrying. The counter argument is that this is just a survey and what actually happens might be a different story. These homeowners were stress tested at an interest rate of 5.25% to prevent situations like this, so technically they should still be able to hang on to their homes even with much higher mortgage payments. Even if existing homeowners are going to be okay, higher interest rates are definitely going to affect new home buyers. Assuming we still have 1.5% of rate hikes to go, home prices will have to drop another 17% to keep mortgage payments the same if variable rates go from 3% today to 4.5% at the peak. If the next rate hike is 75 basis points, then we're looking at an 8% drop from today and then a 9% drop after that point. New home buyers might also run into another cap from lenders too because stress testing conditions are also changing. We won't get the 5.25% stress test rate anymore, and it will transition to be 2% higher than our contract interest rates. So when variable rates get to 4.5%, we will be tested at 6.5% instead of 5.25%. This effectively translates to a drop of 12% from a borrowing capacity standpoint, even if buyers can handle bigger monthly payments. And that will definitely be a much more concrete force to push real estate prices further down. Based on all of this information, Canadian real estate prices will probably see low double-digit drop in prices in general from today. When prices come down, they usually give back the excess gains from the ride-up to balance things out. For example, in the peak in the 80s, Toronto real estate prices went up 24% above the 10-year moving average in 1987. And so when prices came back down, they came down 20% below the moving average in 1990. In 2016, average prices rose 10% above the moving average. And so in 2018, prices fell 12% below the moving average before returning back to normal. In our current cycle, 2021 average prices went 9% above the moving average, so it's likely to see a drop of 9% below the moving average this year as prices come down, which means we aren't expecting much of a price change compared to 2021 average prices. But remember, we're talking about average TREB prices for the whole entire year of 2021, and prices have gone up a lot more since then. We're at around $1.2 million right now as of May, and so we will need another 10% drop from now to get back to the $1.1 million average price from 2021. And to get to that average, the lows for this year will probably end up being even more than 10%. Another question you might be wondering is how long prices will stay low for, and honestly, that is anyone's guess. If you want us to take a stab at it, we would like to defer back to historical trends, and history tells us that downturns are usually sharper and shorter than the way up. Since we went up for a period of around 2 years, we might see the U-turn point closer to the end of this year before returning back to normal by the end of 2023 if we look at Toronto and the GTA as a whole. But there will be differences depending on where you are in the city and what type of property you are buying. We personally think that prices in the 416, especially in the investment property market, should see less of a drop, and the suburbs should see more damage. And you can watch this video right here to learn more about it. Now, we know a lot of buyers are waiting to see where things will go in the next couple of months. And if that's you too, we still recommend that you get your mortgage pre-approval now so that you can secure a better borrowing ceiling. Remember, after the next rate hike, the stress test rate does get higher, so that's going to start reducing the amount of money you can borrow, which also reduces your investment choices. And finally, you've probably heard us say this before, but even though prices are coming down, it doesn't necessarily make it a bad time to buy just because we are in a very strong buyer's market at the moment. If a property isn't moving on the market and the seller ends up accepting your offer that's 15% to 20% off of today's prices, you might end up getting prices comparable to what you can get at the bottom of the U or even better. The plus side of buying today is that you can lock in lower mortgage payments, which makes cash flows look better. It's also more of a comfortable buying experience. For example, it's easier to put in financing and inspection conditions nowadays, which makes a much less stressful process. So, if you are contemplating what to do in this buyer's market, let's chat. As experts in real estate investing in Toronto, we can look at your situation, set you on the right path, and help you find an investment property that's great for you. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye!